Thank you guys so much for being here on time. Welcome to the THP Plus Life Skills class on Insurance Made Easy. We have our fabulous guest speaker, Erin Landis, here today. She actually used to be a full-time THP Plus case manager here in 2014, we figured out. So I guess 4 years ago, and for 4 years she had a full caseload, so she definitely knows the program. She knows CHOICES very well, and we're just so thankful that she's here today to share. Before we get started with Erin, do you guys have any announcements? Any questions about life skills classes? Comments? Yes, Cece.
Is there job fair next Thursday from 8 to 12 at the Marriott?
Okay, awesome. Any other job leads anybody else knows about? All right, then let's get started with Erin. Again, Erin, thank you so much for volunteering your time and for sharing your knowledge with us.
Appreciate it. Like Stephanie said, my name is Erin. I was a full-time case manager here 4 years ago. Just a little bit about my background. I am a Bakersfield native, born and raised. Grew up on the east side. Went to East High, so I feel like Bakersfield, right and true. I'm familiar with Bakersfield. Actually lived in Southern California for an extended amount of time and thought I would never come back here. I thought, nope, not coming back. And then I did. So I was very surprised, but pleasantly surprised. I think Bakersfield's a great place to be. It's a lot of opportunity here. So anyway, like Stephanie said, I'm a full-time insurance agent. Honestly, guys, for me, giving you some information today, it's just to kind of give you some basics in terms of, hey, walking through insurance, what does that look like? What does it mean for me? Because insurance can be complicated. I think now, especially with, we've got the new president, we've got the Affordable Care Act, we've got, the downturn of Obamacare. We've got all these things and we're like, I don't know, like where do I fit in? What do I do? Where do I go? I think it can be made pretty simple and basic, and I'm just gonna give you some tools that you can use so that you can walk through that process and figure out, hey, this is what's important to me and these are the things that I would probably need to pay attention to. And then also too, to give you a bit of good information, there we go, in regards to your particular life circumstance and what healthcare looks like for you in this time of your life, okay? So without further ado, I'm gonna get into this. I'm gonna possibly be walking around a little bit just because that's kind of how I roll. So, okay, so insurance. Let me, does this click? Oh, there we go. Okay, so what is insurance? Okay, so basically you guys have heard of insurance companies out there, right? Prudential, Allstate, Geico, and then you've got Blue Shield, Aetna, health insurance, right? All these different companies. Those companies provide a guarantee of money for a specified loss, damage, illness, or death in return for a reoccurring payment. So what happens is for example, say you are like, hey, I've got a car, I need auto insurance. We were talking about that earlier. You make a monthly payment to that auto insurance company, and in return, if you were to have an accident of any sort, that company then says, hey, because your car was totaled, we pay for the damage. Whether it be $20,000, $30,000, they pay for it, okay? But you've established that guarantee of money because you've been paying a monthly payment. If you don't pay that monthly payment, that contract or that agreement doesn't exist, okay? So if you were driving without insurance and you get in an accident, you could be in some big trouble, right? And you may even find too that even now, like if you guys are in apartments and you're renting, you have to have renter's insurance, right? As a renter in an apartment, am I required to fix the garbage disposal? No, I'm not. That's the property management company. Part of that agreement is because I pay renter's insurance. I don't take care of that kind of stuff, right? So that's what insurance is, and it's an agreement between me and a company. I pay a monthly payment. They then pay out for a loss, okay? That's how it works. All right, so let's move on. So just to give you kind of a basic, I'm all about, so you've got a policy that you pay for, a loss occurs, money is paid, right? Money happens, okay? So you pick the insurance you want. As a consumer and as someone living in a technical age with the internet and everything, you guys have the power to research a lot of different companies online, and there are a lot, okay? It can be a little bit overwhelming. What I would suggest, if you're like, hey, this is the kind of insurance I'm thinking about, type in those companies and maybe even say, compare Blue Shield to Aetna or whatever, or compare Allstate to Geico. Typically what happens is cost-wise, they're very similar. It's just a matter of maybe customer service, like whether or not there's someone you can easily get a hold of, right, when something occurs. You know, you had your car accident, can you call that auto insurance company? They answer right away. You speak to your agent, hey, this is what happened. Okay, perfect, okay? So you can shop and compare. I would highly encourage that because you don't want to get in a position where you're like, hey, you know what, I'm paying $200 a month and I don't even know what I'm paying for, right? Like, what does that even cover? You don't want to be in that kind of situation, okay? So you make the payment, usually monthly. You usually can't approach an insurance agency and say, hey, can I just pay for the entire year? You can't do that. It's typically always on a monthly basis, okay? Always on a monthly basis. Then what happens is you have a loss, whether that be an injury, an accident, or an illness, and then you get paid for that loss. Either you're paid directly, they cut you a check to take care of the damage, or they then communicate to wherever you take that car, if you had a car problem, and they pay that car company, okay? So that's just basic, and this is just across the board, how all health insurance works, whether it be vision, dental, car, health, whatever. That's how it works. So you know that one, I'm making a payment, usually monthly, I've picked what I wanted. I know that if I have a particular loss or accident, it's gonna cover me for that. They're gonna take care of the payment for me. I'm not out, you know, that kind of money. Because the reality is, guys, we can't fork over 20 grand for a car accident if something were to happen. That's just not realistic. We can't do that. So what do? We pay the insurance company on a monthly basis to do that. Okay, that's our agreement with them. Okay, any questions so far? Please, by all means, if you have a question, just let me know. Okay, so here's just some types of insurance here. Like I said earlier, renter's insurance, if you're in an apartment or house, maybe your property management company is taking care of that house or apartment where you live, so you pay renter's insurance. Car insurance, that's obvious. But then we've got like home insurance, pet insurance is kind of becoming really popular. Like if you go to the Petcos and stuff like that, they have pet insurance.
What does it cover?
You know what, that's a great question. I've heard it's not super cheap. I heard it's pretty expensive. And again, it's one of those things where it's like, okay, I'm paying for someone to take care of a loss, right, in regards to my pet. So what does that relationship look like? How much is that really going to cost me?
If my dog dies or something?
No, a lot of times it has to do with, for example, if you were at the dog park and your dog gets in a fight with another dog.
And he has to go to the vet.
Right. You're like, look, I'm not liable. Like, that's not my fault. You know, it's that other dog's fault. You know, so it's kind of putting the blame or the responsibility on somebody else. That's essentially what you're doing with insurance. You're putting the responsibility of that payment on the insurance company, not on yourself, because you can't pay for it. There's just no way. Travel insurance, that's definitely something like if you travel a lot or even travel internationally or domestically for your job, they'll say, hey, it's a good idea to get travel insurance. So for example, if you lost your bag, or not if you, but if the airplane company or whatever lost your bag, now you don't have to fork out the money to incur those losses. So really, you're gonna cut me a check in order for me to take care of what I lost, of what was lost, right? So travel insurance, home insurance. I didn't put life insurance up here. That's another one you guys may hear about. Typically, life insurance is something that if you're working at a job, a lot of times your employer will contribute to a life insurance policy. All that means is that, God forbid, something were to happen and you die, okay, your loved ones then get a financial, like, benefit. So say like, hey, you know what, she was on the job, she had an accident, she died. Okay, maybe they cut your family a $10,000 or $20,000 check just to pay for funeral costs. Okay, something like that. Life insurance a lot of times isn't super popular, which is interesting because especially at your guys' age, it's very affordable. Like very affordable. We're talking like dollars. It's very cheap. The younger you are, the more appropriate and able to pay it is. At my age, it would be more expensive for me to get life insurance. I'm just saying. So the younger you are, life insurance is great because then if something, God forbid, were to happen, maybe your family or your loved ones have a way to pay for funeral costs. Because the reality is now with funerals, I mean, come on guys, like you see people out on the street, like please pay, you know, or raising money for a funeral or, you know, GoFundMe pages or whatever.
It's
and it's like,
expensive.
oh my gosh, it's very expensive. And it's one of those things where you kind of just go, why should it be that expensive? I don't know. My parents are like, cremate us, throw us in the ocean, have the wave splash us in your face. Like, that's what they want. So I'm like, okay, they don't want to deal with it. So these are just some of the major ones that you're going to hear about, like, as you go about your life. Any questions? Again, any questions, guys? Okay, so I want to get into health insurance because here's the reality, guys. Health insurance is a really hot topic right now, right? There's a lot of talk going on about what health insurance is going to look like, whether or not it's going to change, whether or not it's going to stay the same. The reality is health insurance for us in this country looks a lot different than what other people are dealing with in other countries. I'm sure, Stephanie, I'm sure you could speak to that, right? Health insurance and what that looks like is probably way different from where you were from than it does here. So,
Unfortunately, I really wasn't an adult insurance.
Right,
So
right.
I had to purchase my own insurance there, but
sure.
I'm sure definitely, I mean, it definitely was a transition when I first
Sure.
came to America to navigate through the health system.
Right, right. And health insurance can be, I don't want to necessarily say like interesting, but it can be complicated in the sense where it's like, wow, like I'm paying this much money to go to a doctor. How much money are they then making off of me coming? You know, so there's
Yeah.
just a lot of like, okay, how does that work? Because the reality is, hey, I want to have quality care, right? I don't just want to be paying some dude on the corner to take care of my health. Like, I want to know that I'm getting good care, but at the same time, I don't want to hurt my paycheck. You know what I mean? Like, that's kind of the pull and tug of it. Okay, so let's talk a little bit about health insurance. Okay, so health insurance is just that. It covers your health, nothing else. So it's not as if you can have your Blue Shield card and be like, hey, I was just in a car accident. Here's my Blue Shield card. It's not going to work. Okay? So it covers your health. So any medical or surgical expenses of any kind. Okay? Any medical or surgical expenses of any kind. So basically, a lot of times, people will have like a health insurance card, right? And they go to the doctor and they're like, here's my card. Okay, well, just because you have health insurance, though, doesn't mean you don't have to pay for something. Okay, that's not the reality. Okay, so it covers this, but there's an agreement there. Okay, and let me show you what that agreement is. Two things you need to know about health insurance. There's a premium and there's a deductible. Okay, your premium is going back to those first steps I talked to you about earlier. That's that monthly payment that you're going to make. That's your premium. Okay. Now, if you were to go to what they call the marketplace online regarding health insurance, you can see all these different health insurance plans, okay? And they'll show their premium, their monthly payment. And some of them you look at and you're going, wow, it's only $15 a month. $15, you know, that's cheap. But here's the thing, even though that monthly premium may be cheap, the problem is you also have what's called a deductible. Okay, this is what a deductible is. It's the money that you pay for covered health care before your insurance plan starts to pay. So even though you're paying a monthly payment, that doesn't mean that your insurance company is not going to require you to pay for something. Okay, so here's an example. Let's go back to that $15 because I can do $15. I like that. Okay, so I'm paying $15 a month. Not a lot of money. But my plan has, again, a deductible. If my monthly premium, my monthly payment, if it's only $15, odds are my deductible is going to be a lot of money. Okay? My deductible is probably going to be $10,000.
My goodness.
So here's what happened. I'm like, okay, I can pay $15, right? I go to the doctor. Here's my card. I'm paying my insurance company. I don't have to pay you. The insurance company says, wait a second. Because your deductible is that much, you will not have your insurance pay for anything until you've paid for all that money.
Can you make payments at least?
So here's what happens. Say I'm a healthy human being, right? I'm fairly healthy. I work out. I take care of myself. I take my vitamins, whatever. Paying $15. I go to the doctor just for a checkup. Let's just get a checkup, okay? The doctor's like, oh, you know, thanks for the $15 for your insurance. That's fine. That doesn't go directly to the doctor. But remember, you haven't met your deductible yet. So you're going to have to pay me $80. So here's the reality. As a healthy human, I'm probably not going to reach that 10 grand anytime soon, right? I won't. But until I reach it, I still have to pay out of pocket. So then it's like, well, that sucks because I'm not going to...
Until you reach it, until you pay it off?
Until I have paid for that much in services. Until I paid for that much in services.
It's only one payment?
Okay.
Or is it for every?
For everything. I have to reach a $10,000 total before my insurance company will pay for anything. That's how
And
it
then
works.
after, you don't have to pay again?
After that, no.
Oh, okay.
But you gotta remember though, it's like, okay, but you get on the marketplace and you're like, well, Erin, I can do $20. Okay, but how high is your deductible? Because you're not gonna meet that deductible anytime soon,
So,
right?
if your premium's higher, your deductible will probably be a little bit
Exactly.
lower.
If your premium, if your monthly payment is higher, this number is gonna be lower. So you kind of have to think about, okay, how often do I really go to the doctor?
Not that much.
Right? Probably not. But here's the deal, guys. You still have to pay this even if you don't use it. You can't just be like, hey, I didn't go to the doctor this month. I'm not going to pay for my insurance. No, it doesn't work that way. You still have to pay for it. Okay? So that's kind of what people are running into the problem now. They're going, oh, crap. Here I thought I was paying a cheap price on a monthly payment, which I am, $15, but I'm not going to reach that deductible anytime soon. This is like if I was in a major car accident or something, then maybe, right?
Yeah.
But again, I'd have to pay out of pocket until I reach that total. Frustrating, right? Like you kind of just go, and what's the option? Like what are my options? Because that really sucks. So what we see now, especially now with our economy and stuff like that, people are like, well, shoot, like maybe I do qualify for Medi-Cal, right? Medi-Cal is an income requirement-based program, okay? If you don't meet the income requirement, you don't qualify. So you can only make so much money to be able to qualify for Medi-Cal.
Can I add something
Yes,
real quick?
sure.
Just to clarify, former foster youth, it has changed. They
Yes,
qualify
I
for
am going to
Medi-
get into that. Yes,
Perfect.
I'm
Okay.
going to
They
get into
qualify
that.
for it
Yes.
automatically until they're 26, regardless of age.
Right. Regardless.
So we have
What if
Yes.
you're married?
You still, well, that's a good question.
What was that?
You have to ask a lot.
What was that? I'm
What
sorry.
if you're married? Because I have Kaiser.
You'll still have it, it'll just be under your they would get it because
Yeah. So, okay, so this is the real world, guys. This would be in a normal situation. That's where I'm at. I'm like, really? I don't want to pay a whole lot of money on a monthly payment, but I'm not going to reach that deductible anytime soon, so what do I do? Like, how do I balance between a monthly payment that's doable and a deductible that I may meet, right? So, what a lot of people are doing now is, like I said, if they don't make too much money, hey, I'll qualify for Medi-Cal, perfect, great. Like, then I'm not freaking out because I don't have to deal with that stuff. Go ahead.
And this might be another, so you can just say,
Sure.
we'll talk about it later or something. I don't know too much about how, like, what's going to happen with the Affordable Care Act. Like, he's trying to take it away or something like
Sure.
that. I'm not really into politics, so,
Right, yeah.
you know, like, if that's going to happen or...
Right,
Well,
and the
they-
reality is we don't know. The reality is we don't. But like Stephanie said, here's the good news. So in your particular life situation,
Yeah.
until age 26, you are eligible for Medi-Cal. Now, here's the cool part. You're eligible for Medi-Cal, but because of being a former foster youth, you don't even have to have an income requirement for that.
Oh, wow.
So there's no income requirement. Whereas in a normal situation, normal human being, I would have to have a certain income. I wouldn't be able to just qualify for that just because.
So no matter how much money you make?
No matter how much money you make as a former foster youth, you qualify for Medi-Cal.
Oh, that's really
Which is great. Like, I would be like, then use it. Use it as much as you can. Like, I would use that. Don't freak out. Did you hurt your finger? Is that what you're saying?
Yeah, I want to ask whenever I want to pay this.
Really? Yeah, I would. And here's where I would say, if you're like, hey, Am I supposed to have a card for that? You know, like normal insurance, you would have a little card, stuff like that. Here's what I would say. Go to the Department of Human Services and make sure that it is legit. You are there as far as, there's my name, I'm signed up for Medi-Cal, there we go.
They do give you a card.
They do give you a card, okay. And here's the cool part. You don't have to reapply every year, okay? Normal health insurance and just insurance in general, you have a year contract and then you reapply. Medi-Cal, Florida Foster Youth, you don't have to reapply, okay? So it's just up until 26 and then you're done, okay? So that's the cool part. Makes it easy, okay? So it's not based on your income. In fact, there's not even any income questions when you sign up for it. So you don't even have to worry about that. Okay, you're enrolled till you're 26, no reason to reapply. And here's the cool thing, you can go to any doctor, therapist, clinic, or whatever. It's not like regular health insurance where you're limited. Hey, are they in your network? Do they take that kind of insurance? Like, you're not limited to that. You can go anywhere. Which is nice because you may already have an established relationship with some doctors and you're like, okay, well then I don't have to go anywhere else. Like, that's it. So there's all the things that it covers. Here's the cool part. Because Medi-Cal is what you guys get, that takes care of dental and vision, as well as substance abuse treatment, mental health, and medical. All that's included. Yes?
Does medical work for every place you go, or is it just certain places?
I just work for everyone.
You have
Doesn't
to
work
ask
for
them
everyone.
if they
You have to
accept.
ask. Yeah, you have
And
to
make
ask.
sure you know if it's straight medical or not, because I have that problem.
Sure. Yeah.
There's different medical apparently.
Because yeah,
Yeah.
there's
Yeah.
family health,
Right.
health net, and straight.
Yeah.
But I have straight, so
I
I'm
think
sure
we
that
all have
everybody
straight
has
as well.
straight.
Yeah. And I would say too, like maybe there's a comprehensive list online in terms of what you qualify for with this. But again, that's the cool part. So you don't have to then apply for any sort of separate dental or vision policy. Usually those are separate. So that's nice. Okay?
So we get all that too?
You get all that too. Yeah, which is great because honestly at your age, like vision and dental,
We're dead right now. That's why.
I don't pay for
Right.
anything, but I do pay $1 copayment when I go to the
Really?
dentist.
And
Interesting.
then I have
I just went to the eye doctor.
pay more than that.
After you're 21, they don't pay for your glasses.
Okay, any
Oh,
questions,
okay,
guys?
so
Really today was just about kind of giving you a broad stroke in terms of what insurance looks like. So if anything, you kind of understand, like, hey, when it comes to just insurance in general, I kind of understand the process. And then, like I said, pick and choose, you know, shop around, be a smart consumer. Like, go out there and ask questions. Like, because honestly, like, I think a lot of people are just like, hey, I just go to the doctor and then that's it. You know, like, well, ask what it is that you're paying for. You know, like, make sure that you know what's going on. You know, so any questions at all? Okay, please know, Stephanie, Kenny, those guys, if you guys do have questions, you can contact me. I'm more than willing to help out with that. And then even in regards to like other types of insurance, I can give you some input on that. But I appreciate you guys listening, enjoyed it, and
Thank you.
hope you all have a great day,
Thank you.
okay?
Can I ask you a couple
Great, yeah,
questions?
sure, babe.
It's just a
Sure, not a problem.
I got this thing in the mail, and so did my fiance too.
Okay.
And he's not an
Thank you.
investor or anything like that.
Okay.
And we wanted to know
Oh.
what it is.
I got that in the mail too.
I've never had it.
Yeah,
I've never got
is it
before.
regards to your coverage?
Medi-Cal and something like that, and it's saying for our 401k, like, it's,
This is just in regards to your taxes.
yeah.
So like when
have
you
to
go,
put it on your taxes that you have.
here's what I would do. When you go to get your taxes done, bring this with you.
That's what I was thinking.
Yeah, because some of it might be like, it may be when you do your taxes, it may be like what they consider to be like tax deductible or whatever. Like they may say, hey,
for it.
no, no, it's just in terms of your income and what you are paying and not paying for. This just helps in you filing your taxes.
Oh, okay.
Yeah, so it's just.
I don't pay taxes yet. I just got a job, so next year.
Sure, right, but this just shows, hey, my income was this, these things were not paid for. You know what I mean? Like, this is
Oh,
my
okay.
medical.
That's what I figured.
But you
know?
need to have this with you, like when you get your
I'll
taxes
keep it in my
done.
important
Yeah,
stuff then. I wonder if I'll get another one next year.
possibly yes. Because see, here's what happens. This is filing for what happened last year, right? So 2008. So then you'll get one for 18 and 19. So like It'll just keep going 1 year.
Okay, so just take it whenever I get my taxes.
Yes, I would totally
That's
take
what
it.
I figured. I'm like, it must just be something for taxes.
Because it's a
for
way.
them
It's
to
a
know
way for them to understand
what I
the
got
whole
and
picture of
stuff.
your income, right?
Oh.
It's a way for them to understand the whole picture of your income. It's like, wow, look.
Does it say my income and everything?
No, it doesn't say it on here.
It just
But this
says
is just a
that,
way of like, hey, we know what she's paying and not paying for, right?
Yeah, for
So
insurance.
what happens is whether or not they report it is what it is. So that's all. Yeah, I would definitely take
And
it. with
another
you.
thing, on the life insurance,
Yeah.
I'm thinking about getting it because I have 2 stepsons.
Okay.
My question was, does it have to go to relatives, or can you like put it for everybody?
No, here, I'll explain to you a little bit about life insurance.
Because me and my fiance were thinking about getting it for his kids. You know?
Okay.
And if we have a kid, you know, for our kids too.
There's a couple things.
But I wouldn't want to just like, I would want to pay for my funeral. I know, like this
Sure.
is years from now.
All right, totally.
Or
So-
like, I wouldn't want them to just blow it. Like I'd want them.
Right.
Is there a way to?
Right.
do
So
that?
here's what you can do. So in terms of the kids, okay. So for example, I work for an actual insurance company.
Yeah.
Right. I work for Aflac. So
Oh,
that's
okay.
who I work for. Now, me talking about Aflac was not the focus today because
Yeah.
I just want whatever.
Yeah.
But
you can bring it
in
up.
terms of life insurance, okay, there's 2 things. Okay. Let me do this. So how old are the kids?
One's gonna turn 8 and the other one's 9.
Okay. So we do have what's called juvenile life. Okay. And here's what happens. You said they were how old again? 8 and
About to turn 8 in a couple weeks and 9.
okay,
So
8 and 9. Okay. Here's how juvenile life insurance works. Say you're like, hey, I really want a life insurance policy on the kids. Okay. So what happens is
Wait, no, it's on me.
Well, here, let me
Kids,
explain this to you
okay.
because you can do life insurance policies on the kids too.
Alright.
Okay, so here's how this works. Because you can set this up for their college financial future.
Oh really?
Oh yeah. So here's how
So
it
it's
works.
not like they don't have to die to get it? Oh,
No,
okay.
so
That's
here's
what I
how
was
it
thinking. I'm like, what?
So, You're gonna hear 2 different terms. There's
I like that.
there's
then.
whole and there's term. Okay? 2 different types of policies. Okay? 8-year-old, 9-year-old. Okay? You get a whole policy and a whole. Okay? What that means is this policy is available to them for their whole life. Okay? For their whole life. But once they turn 18, they can cash it out if they want to. Okay? Now, here's the
I'm
beauty
not
of that.
sure how hot I am. about
Here's
that.
the beauty of this. If they cash it out, they can use it towards college. They can say, hey, I'm going to pay for a car. I'm going to set up myself an
Yeah.
apartment, you know, whatever. Now, you could set this.
I just don't want them, like, but hopefully they'll be more responsible than them. I don't want them to, like, because they have a mom and stuff, I don't want them to always let her borrow money
Sure.
and like, try to take care of everybody else.
No one else has access to this money but them.
But once they cash the check,
It's theirs.
yeah.
That's their money because it's in their name. Okay? So what happens is a whole life at 18, if they're like, look, we don't want to cash it out, we'll now it now becomes a whole life policy, then the money that they had out here doubles. So say if we were like, hey, let's do it 20,000, right? 20 is a good number,
Yeah.
right? Even if they decide not to go to college, it's a good way for them to maybe get a car, get an apartment, whatever, okay? If they decide at 18 that they don't want to cash it out, they want to keep it, that then turns to 40.
Oh, so.
Which is cool because then it's like, again, if something were to happen, God forbid, they can choose who their beneficiaries are, who gets that money if they pass away, what they do with the money, whatever they want, okay? Now, here's the cool part. At ages 8 and 9, getting a juvenile life policy on them, it's maybe like $2 a month, maybe. Okay, here's the cool thing. So you're like, okay, let me think, 10 years, you know, up until they're 18, you might spend total $2,500 when it's all said and done for a,
What if you wanted to do even more money?
that's up to you.
Yeah.
So the more you pick, the
Because
more
that's like
expensive
a
it'll
couple
be.
years
Right.
of college.
Right, exactly.
Like
So the more you
community.
pick, the more expensive it would be. But at
Right.
the same time, you're like, okay, but my return on investment, I only spent maybe let's
Yeah.
kick this up
Even
to
if
$5
it's
grand.
$50 a month each for them, $100 a month, I'm
Right.
gonna do it.
Okay,
That
so
is
that's
really cool.
so that's juvenile life, which is great because now what we're seeing is a lot of people do this because here's the thing, they want to lock in that price at that age. That never changes. So if he turns 9 or 10 the next year, the price never changes. Why?
Oh,
Because
really?
he started at that age. So that price stays. That's why I said at your
Until
guys'
he's 18.
Yeah, that's why I said at your guys' age, I'm like,
Yeah.
so
And I want to get stuff on me and my fiance. That way, if we ever pass away or something, then they
Right.
get it.
So now in your situation,
That is cool.
okay,
I'm
so that's
definitely
a,
gonna check that out.
yeah, and I can give you my card.
Okay, cool.
So that's a juvenile life. So now, again, there's still, you can do a term or you can do whole, okay? A term means just that. It's just for a set amount of time, okay? So we've got 10, 20, I think it goes all the way up
Years.
to maybe 40. Yeah, maybe 40, I think. So for example, I'm 42, okay? I'm gonna be 43 this year.
Yeah.
In terms of affordability, for me, because I'm older, I would probably do just a term, okay? Now here's the thing. If I outlive that 30 years and then I go,
It cuts
okay,
out.
like now it's over, now what do I want to do? I then say, okay, well let's add another 10 years. But again, I'm locked in at that price at that point. So whatever age I'm at in 30 years, it's done. Now I have to pay at that age.
Yeah.
Right? Okay, so that's kind of the pull and tug of it. It's like, again, but I'm older. Whereas a whole life is just that.
However long.
It's
you
your
live.
whole entire life. Yeah. At your guys' age, I would imagine you're in your 20s.
Yeah,
Right?
21.
Okay. Very affordable. So, whereas for me right now, at 30, it's maybe 20 or 40 bucks.
Which isn't bad at
Which
all.
is not bad. No, it's totally not. Again, you get to decide how much you want. Okay, so it goes, God, we go all the way up to 500,000, I think. But again, it's like you have to decide, okay, well, what is my focus? Like, do I want them just to pay for a funeral? Do I want my kids to be set up for a few years?
Yeah.
What is my
I want
point?
them to definitely go to college, but by the time I get older, though, they should already be out of college. They
Well,
can
and there
learn
again,
how to
that juvenile
house,
life
maybe.
policy is,
Yeah,
there you go.
That'll pay for their
And the
college.
cool part is too, if they're like, hey, we decide we don't want to cash it out at 18 and we want to keep a life policy on us, then at that age you could be like, now it's your responsibility to pay for it. You're
Okay.
18, now you're going to pay for it.
Yeah, okay,
You know?
so if they do that, if they switch it to a whole,
Uh-huh.
will they ever be able to cash it out?
No.
It's only 18 you can cash out, and then that's it.
Right, exactly.
And then once after 18, then it becomes life insurance policy for if they have kids or something like that.
Right, then it becomes a life insurance policy for as long as they want it to be. So if they decide, hey, I'm just going to do a 40-year term policy or I'm going to do 30, like however, whatever they decide. Yeah, because at that point they're 18 and they're legal. They can make that decision.
Yeah.
So it's now theirs. They own the policy
Yeah.
essentially is what it is. So yeah, the cool part is the cashing out for college because now with the rising cost of college, it's like, okay, great. So for maybe $2,500 up to $5,000, I'm gonna guarantee that you're gonna have 20 grand when
Yeah.
you're 18.
That's crazy
Sure,
how that
like-
works, huh? Like you only pay a little
Yeah, and I think people don't. I think the
bit.
thing
Because
is
they like that monthly income, huh? The tax companies.
right, and I think what happens is that people just don't know. They just don't know about it.
Yeah.
So it's like, oh my God, this is great because now you can sit there and go, God, you know, like
It's
maybe
taken
that'll
care of.
alleviate him, you know, applying for financial aid, you
Yeah.
know, or whatever. Like, oh, you know, because it is kind of unsettling to think how expensive college is.
It is. We only go to BC,
Sure.
and it's like 10,000 a year. So that's to me a big amount, you know. So
Sure,
I could
sure.
only imagine big colleges.
Right.
I don't know how much Cal State is. So if they go to BC for like 2 years, really probably 3 if they're taking it
Sure,
for a little
sure.
bit. So that's already 30,000 right there. For
Right,
a couple
right.
Years. So
Yeah.
I
So,
definitely would like to look into it.
yeah, let me give you my card
Yeah,
and then we can talk about that. But yeah, the juvenile is great.
Yeah,
And
that's-
it's like,
that's what we'll probably do, and with the life insurance for us. So that
Yeah, my
way
number's
they
on
can
there.
have college and
That's
stuff,
right.
you know. That way they won't wait until they don't have to wait until something happens to
No.
us to get a college fund.
no, and you don't have to sit there and go, oh, we gotta put money away, save for college, like.
Yeah, that
You know what I mean?
guarantees putting money away.
Right, exactly.
Just
My
make a monthly
cells on
payment.
there, you can call or text. Either way is
Cool.
fine. So I'm available.
Thank you. It was
either
so
way.
nice to
Sure,
meet
not
you.
a problem, hon. Not a problem.